And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB. Discover the latest trends shaping digital assets across Africa. Download the ABSA Africa Digital Assets Insights 2025. Good evening, I'm Stephen Grootes, 8 minutes after 6. Welcome to the program. I do get a sense that just today, next week is going to be very different. Calmer, more relaxed, fewer people around. Probably less money being traded on the JSE. I wonder if trading volumes will be slightly lower, particularly on Monday and heading into the kind of final sort of week when everybody's here. The great South African getaway very much underway today, and you can see that people are pouring out of some of the big centres. They'll be off home, be off on holiday as well. Plenty to come in the next little while. An astonishing story was the word that I used earlier, and I think I'm going to stick to that word from Moneyweb today about what happened with Curro and the Jannie Mouton Foundation's buyout offer. And Moneyweb suggesting that, in fact, the Financial Standards Conduct Authority, or Financial Sector Conduct Authority, rather, is investigating some trades. They're assessing the complaint. That means that they haven't decided to investigate yet, is how I read that. Niekerk is the editor at Moneyweb. We'll hear from him in a moment. If you looked across the boards today, I mean, it was green in most places. The rand is stronger. The dollar is a bit weaker. This is obviously because of the Federal Reserve and their dropping of interest rates. But gold shooting the lights out once again, taking platinum along with it, and a very strong day on the JSE. An appropriate day, I thought, to speak to John Bickard. He's the portfolio manager of the 91 Value Fund, and he's suggesting that next year might actually be stronger than this year, that it's just the beginning, and he's talking about why that is. So we'll get an understanding from him as to why and what is actually driving that. A Friday file tonight. I mean, I love a train trip. I haven't been on a proper train trip in years. I've been on the Gautrain, of course, many times, not as often, not much recently, but there was a time I was on it fairly often. But there's been a big sort of Ceres Rail experience in the Western Cape, and we'll speak to someone who's been on it and just sort of follow up that process. Do like a train trip. We'll talk about that. And don't forget the Friday Biz Blitz on your Money Show tonight.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, news today from the Bureau for Economic Research about inflation expectations. And when we look back on the year, inflation expectations and the lowering of the Reserve Bank's inflation target is probably the standout story. It's the one big thing that changed this year that I would expect to actually lead to lower prices for generations to come. There's really no other way to describe it. It is a monumental change, and it was done with an absolute bare minimum of fuss. But we saw today the first tangible results of that. And this comes from the Bureau of Economic Research. They put together inflation expectations. They asked different people in different sectors what they think is going to happen. And this matters because inflation expectations then basically lead to what people ask for in their salary negotiations. If you think inflation is going to be 5%, you're going to want 5% or more. But if you think inflation is only going to be 3%, well, then you'll be happy with 3% or a little bit more. And inflation expectations are now at their lowest in 25 years. They're down 0.5 percentage point, which is actually, if you think about it, in the great scheme of things, huge. 0.5 percentage point may not sound like much, but it's a very, very significant number in this context. And in fact, for the medium term, inflation expectations are now well below 4%. So for next year, the inflation expectation is 3.8%. For the year after, it's 3.7%. And for the 5-year period starting from now, it's 3.7%. Now consider where inflation was, 4 years ago. Obviously, you shouldn't really compare it with COVID, the outbreak of Russia's invasion of Ukraine, things like that. All of that said, inflation is down. Now, there are lots of reasons for this. We've seen how many goods China is exporting, what that's doing to inflation. New car inflation is 1.6%. Now, you don't buy a new car very often, maybe never. I never have. And yet, what that means is it still goes into the basket. And all of that starts to have a big impact. Food prices also looking quite good at the moment. So on what's been a strong day on the JSE, some good news about inflation expectations. It's good to hear from you tonight. Don't forget 011 883 0702 021 446 0567 and voice notes on 072 702 1702.
702.
702.
Stephen is on X.
At Stephen Grootes.
Well, a story on Moneyweb this afternoon, and I must tell you, when I first saw it, my eyes actually popped. The Financial Sector Conduct Authority has confirmed it is assessing a complaint. There was insider trading in shares in the Curro Schools Group in the months just before the Jannie Mouton Foundation said they would spend over 7 billion rand buying the group. When they made the announcement, as you can imagine, Curro shares jumped by 60%. If you were a shareholder before that, well, you would have been very pleased. Ryk van Niekerk is the editor of Moneyweb and the person who wrote that story. He joins us now. Ryk, good evening. Good to have you on the Money Show. What do you know about the case that has been lodged? What is the FSCA actually assessing?
Yeah, good afternoon, Stephen. Listen, there's not been any insider trading proven. I just want to put it out there. There were just some suspicious transactions referred to the FSCA for investigation. And that is at this point where it stands. I don't know which transactions have been referred. I did a thorough analysis of the shareholder registers and I looked at transactions, and I found 3 groups of transactions which I thought were very suspicious, and that's what I highlighted in the article.
I'm going to come back to that in a moment, but first, who did the referral? Who said to the FSCA, I think you should look at this?
Well, I don't know, but it should be one of the regulatory bodies, probably the JSE or even Straight. They look at all of the transactions. They, compare whether they could have been done in a sensitive period, in a closed period. But they look at those transactions in a lot of detail, and I would suspect it's one of those.
Okay, so the timing is interesting. You say that you've looked at what happened. What do you think was happening? Well, let me put this another way. Why do the transactions look a little bit suspicious to you at this point? And just to reiterate, nothing's been proven.
You see, the transactions I highlighted, or which I expect or suspect that has been referred, were concluded or transacted within 6 months of this announcement, which led to the share price jumping by 60%, as you've said. And, obviously this is a very complex deal, and it would have taken some time to put together. And that is what I thought, if there were insider information available, it's, probably closer to the announcement as possible. And there were 3 of those transactions, or 3 parties involved who made significant transactions or bought significant number of shares in that 6-month period.
Would they have made a lot of money by doing that?
You need to see that in context. The 3 parties, let's start with the foreign one, City Clients Nominees 8. That is a City Group, a nominee account. So we don't know who the beneficial owner of those shares are. But, in that 6-month period up until to July, they bought around 75 million Rand's worth of shares, and they sold it at a profit of 31 million Rand.
Sure.
So a profit of 31 million, that's pretty decent. The PIC, the Public Investment Corporation, also traded in that period. They made a profit of 21 million. Now, that sounds like a lot of money, but for the PIC, who manages over 3 trillion Rand's worth of assets, I don't think that is significant. So that may have been a normal, type of investment decision. They also confirmed to me that that was just part of their normal rebalancing. And then the 3 interesting transactions, and they come from companies related to the Mouton family. And they are Jan Mouton Beleggings, Piet Mouton Beleggings, and My Favorite Beleggings. And they refer to the 3 siblings of Jannie Mouton, the founder and previous CEO and chairman of PSG. But those names are slightly misleading because they are not managed by those individuals. Jan Mouton, he is the current CEO or chairman of PSG. And Piet Mouton is involved with the Jannie Mouton Foundation, who actually made the Curro offer. But those 3 companies are managed and controlled and owned by the Jannie Mouton Family Trust. And that trust has 6 trustees, and those trustees would have made the decision to buy those shares. And those shares were bought between 10 April and 2 May. And remember, the announcement was on 27 August, so that is within 6 months. of the actual announcement. Now, the question is that they know at that stage that the announcement is coming. They claim no, they didn't, and that decision was only taken a few weeks after the last transaction at the end of May. That is their position.
So you spoke to them and they deny any wrongdoing here, and all of the parties, as far as you've been able to contact, because there's one you don't know, they say they did nothing wrong.
Well, that's definitely the PIC, and that's correct. I spoke to the city group, or I contacted them, and they said we don't comment about these things.
Ryk, there are other factors in this, because this is a big deal, as you know, the foundation's purchase of Curro. Just for the record, and I'm relying on your greater knowledge here, none of this stops the transaction, right? It still goes ahead.
No, I don't think this will stop the transaction. There may be an investigation from the FSCA, but no, I don't think it will stop the transaction. Definitely not.
Ryk van Niekerk, I really appreciate the time. Thank you very much indeed. The editor at Moneyweb, as I say, a story that made my eyes pop. We'll be watching that carefully. I do wonder if the Financial Standards Conduct Authority will issue any kind of statement on this. Just to reiterate, they're at the assessment phase. They look at the complaint. They assess, is there something to investigate? Only if they say yes to that, do they actually investigate. I imagine the only statement we might get is if they decline to investigate. Let's just wait and see what happens here. 19 minutes after 6.
The Money Show Explainer.
Well, on a day when the rand is much stronger, the gold price much firmer, the JSE up significantly, comes quite a strong argument that, in fact, what we've seen this year might be just the beginning. It comes from John Bickard. He's portfolio manager at the 91 Value Fund, and he believes there's a very bullish case for South Africa going into next year. John, good evening. Thank you for your time. We've all seen what the JSE has done this year. Why do you think we've built up a big head of steam and this will continue?
So I think the thing that we're seeing is the big gap between the overall index, which is up more than 30% this year, which is all driven by gold and platinum, and to a lesser extent Naspers, and what we call SA Inc. shares, the shares that are dependent on South Africa for their income and their profits. So that's the retailers and the banks and the industrial shares. And so far this year, they're massive laggards. They're only up 8%, which is miles behind the index, and it's opened up this big gap. And so when you're valuing these SA shares, you do a discounted cash flow, and in that cash flow, you assume a long-term growth number and you assume a discount rate. And that's really the interesting thing to us, is the discount rate has dropped so much for South Africa over this year. And the discount rate, the first variable that you plug in for the discount rate is the 10-year bond. And as you're well aware, South African bonds have been world leaders in bonds this year. I think they're up 21% odd in rand and 33% in dollars. So they've been the best performing bond market. And the bond yield has fallen from 10% at the beginning of the year to 8.5%. And any analyst who's ever built a discounted cash flow model knows that if you cut your discount rate by that amount and you keep your cash flows the same, you get a very different number in terms of what the value of the share is. And just as a rule of thumb, if a low risk, steady cash flow like a South African government bond goes up 21%, a leveraged equity with a higher discount rate and more risk should go up off the top of our heads. And actually in models, not the top of our heads, financial theory says it should go up 40%, and yet South African shares are up 8%.
Why are then, the obvious question would be, why are some of these companies so undervalued? Has the market just not caught up? Is there still something that we're not seeing?
So when you ask people that, the answer will be, well, we're worried about politics, or we're worried about South Africa's relationship with the US. And I would say, as a fund manager who's been in the industry a very long time, that the truth is something much more pathetic than that. The truth is that most fund managers went into the year underweight gold and platinum, and gold shares up 150% and platinum's up 100%. And it's absolute, there's not a fund manager, including ourselves, who've beaten the index this year. And the simple truth is fund managers protect their jobs, and they're behind the index, and the gold and platinum price is still rising. So they're selling their SA Inc. shares to fund further purchases of platinum and gold to narrow their underweight to their position, which makes no sense at all because the very thing that helps SA Inc. shares is higher platinum and gold prices. So if you're bullish on platinum and gold, precious metals are our biggest export and it's helping our terms of trade and the rand and the discount rate and the economy. It doesn't make any sense to sell these super cheap South African shares. To give you an idea, there's no index that shows, they don't have an index for SA Inc. shares, but we've built our own index, which we put in all the representative SA Inc. shares. And basically these shares trade on a 10 PE and a 5% dividend yield, which suggests that these shares are trading on, 10% free cash flow yields when the risk-free rate is 8.5%. It's completely undervalued. So people will tell you a long story why they're lagging, but the simple truth is they're being sold to fund more precious metals, which is a totally illogical trade.
It may be illogical, but won't that continue, especially if gold is on track? I mean, extraordinary, but I've seen some predictions of $5,000 at some point. So
I have to say, I agree. Yeah, I hear you, but I agree. Gold is going to go to $5,000. But, if you're a savvy investor, should you buy, the gold shares, which are up 200%, or should you buy SA Inc., which is up 8%? Should you, SA Inc. shares are direct beneficiaries of the gold price, and eventually it will flow through to the economy and flow through to those shares. So it's a much lower risk way of playing the gold trade. I mean, if you tell me gold's going to 5,000, I say buy more SA Inc. shares, because if you're wrong on gold, you're going to lose a fortune in gold shares. But, you're protected by that 5% dividend yield on these undervalued SA Inc. shares. And if you're right on gold, eventually the SA Inc. shares will catch up. So as far as a risk-adjusted trade goes, we think that's the way to play the precious metals, is to buy SA Inc. shares.
So John, there's, as you, I think, correctly ascribe value. In other words, these shares are undervalued now, but they're only worth investing in if the price is actually going to go up. Do you think that is what is going to happen next year? I mean, there are plenty of reasons, and not just reasons you've spoken about, to suggest that, in fact, South Africa will have a very strong year next year.
Yes. So, that's the thing about value investing. And I've been doing this for 25 years. And the secret to value investing is not to worry when it's going to happen. It's when you have this big dislocation in the market like there is now. Not to say I'm worried it doesn't happen next week, next month, next 6 months. All you say is these shares are fundamentally undervalued. The prospects for South Africa are improving. So we've spoken about precious metals. We also got to add in the oil price is down 15% in dollars this year, and that's our biggest import. So our terms of trade have massively improved, and that will, if you look at history, it's always resulted in improvement in the economy. So what I think is holding people back, apart from the fact that they're selling them to buy precious metal, people are worried about the growth rate in South Africa, because we're only growing at 1%. But if you look back in history, any time where we've had such a big improvement of terms of trade like we have in the last year, GDP has picked up between 2 and 3% 6-12 months after that. So, to those people who say I'm worried about the growth rate, I say I think SA Inc., South African economy will be growing at 2.5% in a year's time. And then people will come buy the shares. And obviously a big thing is foreigners need to buy. And actually they haven't bought anything. They bought a bit after the election, then they sold again. And only in the last month have we started to see them buying. And South Africa is now a bigger part of the index, and foreigners are a full 1/3 underweight South Africa in terms of our weighting compared to the index. So the big driver will be when the foreigners come and buy, and the foreigners do like to only buy once the GDP growth rate picks up. So, but by then, if you wait for that day when you open the paper and it says GDP growth rate is 2.5%, you've missed it. You have to buy ahead of that, and we think this is the time.
Politics, could it still ruin the party?
So I think you've hit the nail on the head. That is, when people tell them the story, they say, where can you be wrong? And actually the simple truth is, I don't think I can be wrong on any of those above things, but the one wild card is politics. And the first thing I'd say is, if you look at stock markets, politics plays a very small role in future returns. It's really the growth rate and the discount rate. Politics But kind of politics plays a role only in the very best and the very worst tail risks. So politics plays a big role if you're Venezuela or Zimbabwe, but it doesn't really play a big role if you're the UK or the US, and at the moment, South Africa. So the wild card that is politics is really in that terrible 1% tail, the Zuma kind of outcome, which we don't think is going to happen. But that is the tail risk you need to worry about.
Grant, thank you very much indeed, John. Really do appreciate it. John Bickard's portfolio manager at the 91 Value Fund. A very, very bullish case indeed.
The Money Show.
The Markets.
Grant Nader is portfolio manager, Benguela Global Fund Managers. Grant, good evening. You would have heard that. Do you agree? I mean, it has been one hell of a year for South Africa Inc.
Yeah, Stephen, to be honest, I do agree. You remember, the thing with markets, they look ahead. And everything is about incremental improvement. Are things getting better or are things getting worse? And I think there's a strong case to be made for almost all metrics in South Africa to be getting better at the margin. We've talked about inflation. You just look at the real wage growth that's coming through as a consequence of the lower inflation. We've had 6 rate cuts now. This GNU is holding together. It's bringing accountability to the market. And the oil price remains low. And we've got commodity tailwinds. And I think commodity prices can sustain at least elevated levels and, in fact, probably build from here going into next year. And that is always positive for South Africa. So, yeah, I'm in the bull camp for sure.
Gold price again stronger today. I'm presuming a little bit of a nudge from the US Federal Reserve, but other factors at play. I mean, John Bickard, he's part of the $5,000 an ounce camp.
Well, I mean, look, 5,000 is not that far from where we are anymore, but I mean, I haven't put a number on it, but I think there's a lot of legs supporting the table that gold is standing on. And one of them is lower rates from the Fed. That's bullish. One of them is a higher inflationary regime that is in place globally. One of them is a weaker dollar, or at least a debasement of global currencies, ongoing fiscal stimulus and budget deficits happening all over the world, not just in one or two countries, and central bank diversification away from the dollar. So there's many reasons to remain fundamentally positive on gold, and I think there's still a bull case to be made.
Grant Nader, thanks so much. Portfolio manager at Benguela Global Fund Managers. You with The Money Show, just gone 6:30.
The Money Show.
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
And DSTV channel 856.
On the next Money Show, we kick things off with the agricultural economist, Wandile Sehlobo. South Africa's wine grape industry heads into 2026 with a lot of optimism. Then as festive plans take shape, we unpack the insurance risks of holiday home swaps, Airbnb hosting, and car loans with Ernest North, the co-founder of Niekerk. After that, we explore the art of culinary success with our How I Make My Money guest, Peter Tempelhoff, the award-winning chef behind Cape Town's acclaimed FYN, and the first South African to earn the prestigious 3 Knives accolade at the Global Best Chef Awards. Ian Mann, Managing Director of Gateways Business Consultants, shares his pick of the best business books of the year. And as always, expert analysis of the day's biggest business news.
7:02. Stephen is on The Money Show.
6 to 8 p.m.
Well, you may remember on the 27th of November, just a couple of weeks ago, Cell C making their debut on the Johannesburg Stock Exchange. And one of the debuts that had been widely anticipated was a tremendous achievement for the telco. Shares rose by 4% on that very first trading day. And on the day of the JSE debut, we're in conversation with Cell C's CEO, George Mendes. He had a lot to say about why Cell C has gone in this direction and why it's made this decision. He also told us what it means for you as the customer, the shareholders, and the company's future too. Here's a snippet of that conversation.
We have seen some contraction by the other two players in prepaid from a revenue point of view. We think we'll be able to go positive. So we think we've got a growth story coming off a lower base. We've got exciting opportunities and propositions for a customer-centric organization. So we think we'll be able to take some share there. We're also a very lean and agile organization. We're only 900 people, so a strong partnership model on how to get to market. So it's compelling. So far we're seeing decent results, and we think it's at the beginning of a nice story.
Jorge Mendes there, the CEO of Ceres. I remember that first day very, very well. You can listen to the full interview on primemediaplus.com. You can read the article about our conversation as well on ewn.co.za.
702 with Stephen Grootes.
Email him on stephen@702.co.za.
Well, we'll have Friday File in just a moment for you. An interesting a release on the Government Gazette from Solly Malatsi, the Communications Minister. And he has now said he's issued new regulations for ICASA, the communications regulator. And essentially, this is about local ownership requirements. And, you know, if you put all of that together, ICASA, local ownership requirements, Solly Malatsi, this is about Starlink. And what he's essentially done is he said that there must be equity equivalence. In other words, he's creating a way for ICASA to say that Starlink does not have to give up some of its shareholding to account for BEE. And we all know how Elon Musk feels about BEE. So it might well be the start of a significant process that sees Starlink finally coming to South Africa. I do wonder, though, so much is changing so quickly in this area. If Starlink had come maybe 5 years ago, it would be all anyone talks about. Now, a lot more fiber around. I don't know, but certainly a very big change coming from the Communications Minister, Solly Malatsi.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
The Money Show.
The Friday File.
The Friday File.
Well, I don't know if you know this about me, but one of the things I really enjoy is looking at trains. I'm not a train spotter. That's something else. But I wouldn't mind a long trip in a train. And many, many years ago, I actually went across the United States on Amtrak, their train service. It's always something I've wanted to do here. And the closest I've ever come as a student is that trip from Joburg to Makanda. I don't think it operates anymore. The Shosholoza Mail is kind of on and off. I did thoroughly enjoy that, though. And I was interested to read this week about a train service. It leaves from Cape Town, takes you on a train trip for a day. You go to the Ceres Valley, and then you go back. And one of the people who's been on it is the Business Day journalist Margie King. She wrote a fascinating account of her journey. Margie, good evening. Thanks for your time on The Money Show.
Hello, Stephen.
How does this work? What kind of services really on offer here?
Oh, it's a very, very leisurely travel. There are various ways of being on the train, from open carriages to coupes. And it's just a day trip. It takes 12 hours, which sounds like a long time, but it does go very quickly. And you go up through the mountains, the Hottentot Hollands Mountains, into Elgin. And in Elgin, there is the most amazing market in an old converted fruit warehouse.
So you go on this train trip, you go through, and it goes from Cape Town, right? So you go through the mountains, the scenery. I mean, the lovely thing about a train trip, especially in that part of South Africa, is that the scenery changes.
Oh my gosh, yes. Yes, it is. It is incredible to get so close to the fynbos, to the mountains, in a way that you just don't in a car. It's lovely.
How fast are you going? I mean, whenever I'm in a car in that part of the world, you're kind of rushing, fiddling with the radio, and basically, you know, going as fast as you can. How fast are you going on the train?
I think it's about 45 kilometers an hour at full speed. There's a time in which we run right next to the highway, and we were being overtaken by cars at a fairly rapid rate.
Mm. So you spoke about the different types of carriages. A coupe, if I remember, is a sort of 2 or 3 person sleeper carriage. What other options are there?
There's a 4-person carriage. The value of those two would definitely be for people who have a child or children who might get a little bit tetchy over 10 hours. It'd be nice to be able to have a bit of, quiet time. There's a bar and like a lounge and a coffee shop. And you can, buy your ticket to sit in the lounge. But if you sit in the general seating like we were, then there are waiters who come past to take your order, or you can brave going past, going down the carriages to the bar.
When you go from one carriage to another, I mean, I have a childhood memory of you actually went outside the train. It was very exciting, and I have a memory of actually standing sort of on the joint with my dad. And my mom asking us, why have you taken so long just to go down the train? Because it was fun, Mom. Is that what you do? Are you outside the train when you do it?
Yes, you are. Yes. If it makes people nervous, you're definitely going to have to use the waiter. I find it. I love it. I love that. Old memories like yours, yeah.
The benches, so the open seating. What are we looking at? Are we? I mean, it's not plain seating. Is it something? It's not like an aeroplane. No. It's better than that.
It's like a little wooden cabin. It's like a little wooden cabin. That's not quite the right word. So wood and leather, and you're ever so slightly screened from the next person, from the people across the train. But it's just more of a slightly like a little nook.
And I presume every seat is a window seat, pretty much.
Yes. Yes.
One of the big benefits of it. So you spoke about the lounge, you spoke about the bar. You've got to have a bar on a train. You've got to make yourself move. Are there other things? I mean, 12 hours is quite a long time, and there must be lots of ways to take money from unsuspecting clients while they're moving like that.
It's 10. There's a 2.5-hour layover at the Elgin Market, which is quite unlike any market I've ever seen. It is audacious and beautiful, lovely. We sat and just watched the scenery, chatted a little bit, joked with the people next door. Time goes by quite fast, and there are two women who offer masseurs or who offer massages, who can help take the time, especially on the way back. Feeling drowsy in late afternoon, be very pleasant.
I mean, I suppose the thing about something like that is you kind of get into a different mood. I mean, do you find yourself speaking to strangers in a way that on a plane you don't want to sit in the middle?
Absolutely, yes, absolutely. And the staff, there's so many characters there. The one guy was doing a demonstration as if he were on a plane, as if he were a plane steward, and demonstrating. They just have a lovely sense of humor, very pleasant.
Do you think, I mean, it's a day trip, right? So I would think there might be quite a big market for this. It's something slightly different. If you're a bit jaded, maybe it's something to just sort of reignite, a childhood memory or two. I would imagine quite a lot of people would be interested in something like this.
Yes. I had to wait a week before I could get it was booked up for the day I wanted to go, so I had to wait a week. And the train was pretty full come Christmas time. They are running more frequently at the moment until New Year.
And what kind of engine? I mean, it's too much to ask, but it wasn't a steam engine, was it?
We didn't have a steam engine. We had a diesel. But I was chatting to one of the staff, and he said they use used car oil to run the diesel, which I found quite an interesting thing. What a good way to get rid of that problem. Yeah. Yeah. So the steam trains were in for repairs.
This is going to be a strange question. When so you wake up in the morning and off you go. I don't know what time you left. I imagine sort of 7 o'clock or something if you're back in 12 hours. You come back at 7 o'clock. So you're back where you started. Did you feel like you'd had a sort of adventure for the day is my question, because you've done something completely different to what you normally do.
You have absolutely nailed it. That's exactly what it felt like.
You've just gone and done something completely different that's, other people wouldn't do. You would want to do it again. You'd want to take someone on it, that kind of thing.
Yes. In fact, there was one carriage where there was a party going on. It was literally a birthday party. It was crowded. And I thought, what a lovely way to have a celebration, birthday or whatever. But just on the individual level, it dislodges your thinking in a way that perhaps flying does as well, where you just get a little bit out of the normal patterns, and that is very exciting. Yeah.
the people on the train, were most of them South African? I mean, I can just imagine how much money you can make with a lot more foreign tourists in Cape Town at the moment. But were most people South African and up for the adventure, or did you notice there were actually quite a few people from other places?
No, very few from outside of South Africa. Most emphatically a South African thing.
And Margie, you'll do it again, eh?
Oh, absolutely.
Margie King.
Absolutely.
Thank you very much indeed. Margie King is a journalist at Business Day. Sounds like it was quite a fun trip. As I say, I do have a slight thing for trains. Haven't been on one apart from the Gautrain for a very, very long period of time. And certainly would be a big fan of the Shosholoza Mail if that gets sorted out. My wife's been on notice for quite some time that the moment it becomes possible to do a train trip safely and easily and sort of on time, which is really the big thing, from Joburg to Cape Town, I'd like to book some tickets because I do think it's a good way to spend some time. I know plenty of people who've done some of the various services. There are services that are recovering from PRASA. This, of course, is run very differently to that, and it is just a day trip. It does sound like something very, very different. Margie King, I really do appreciate the time. Thank you. It's 7 minutes now to 7.
Stephen Grootes
Taking your calls
on 011-883-0702.
Well, time now for the Friday Biz Blitz. You know how it works. You call us on 011-883-0702 or 021-446-0567. We give you a question. If you get the question right, we move on to the next question. If you get the question wrong, well, we move on to the next caller. So those are the numbers to dial. First question tonight on the Friday Biz Blitz. Which two companies are merging in a deal with $50 billion to create one of the world's largest metal producers, and they're focused on copper? Which two companies are merging? It's a $50 billion deal, and they'll create one of the world's biggest copper producers. It's an easy question. We spoke about it at length on The Money Show this week. 011-883-0702, 021-446-0567.
The Money Show, Stephen Grootes, is brought to you by Absa CIB. Discover the latest trends shaping digital assets across Africa. Download the Absa Africa Digital Assets Insights 2025.
The Money Show, Friday Biz Blitz.
First question on the Friday Biz Blitz tonight. Which two companies are merging in a $50 billion deal to create one of the world's largest metal producers based on copper? It's a conversation that involves South Africa and Canada, and I'm sure if you've been listening to The Money Show this week, you know the answer. We'll also have a question around a vegetable ban. Questions too around what could be embarrassing for bosses. Time Magazine's, we'll have a question from Time Magazine, and also a supermarket chain that did not have a great result this week. But first, our first question on the Friday Biz Blitz tonight is which two companies are merging in that $50 billion deal to create one of the world's largest metal producers, and it's focused on copper, and 70% of it, in fact, will be based on copper, one of the metals of the future, or so we're told. So, that's the first question. 011-883-0702, 021-446-0567. Which two companies are merging in that deal to create one of the world's largest metals producers focused on copper? One of the companies, of course, has a very, very long history here, and one of the companies has a very, very long history in Canada. There have been all sorts of conversations around the regulations around this and the histories of these two companies. But which two companies, what are their names, are merging in this $50 billion deal that will create this massive, massive company that will be focused on copper? That's the first question tonight on the Friday Biz Blitz. And of course, it's a merger that really has got people very, very interested. Let's go to Joseph in Rosebank. Joseph, do you know what the two companies are?
Yes, Anglo-American and Czech.
Joseph, you have won. Indeed, well, you haven't won, but you've got the first one right. You are correct. Okay, second question, Joseph. Which country in the Southern African Customs Union has reinstated a ban on vegetable imports from South Africa? We were talking about it with Wandile Sehlobo this week. Which country has again banned the import of our vegetables?
Botswana.
Is it Botswana? Do you know, Joseph? It is Botswana. They've again restricted imports of several vegetables to from South Africa at the moment. Okay. Next question on the Friday Biz Blitz. What are companies going to have to publish that might be a little embarrassing for their bosses, the people who earn the most? What are companies going to have to publish that might be a little embarrassing for their bosses? It's a change to the Companies Act, Joseph. Do you know the answer?
The differential between the top and bottom salaries.
Joseph, yes. Congratulations. Yes, that's amazing. This is changes to the Companies Act, and it will compel companies to reveal the gap between the lowest paid worker and the chief executive. Okay, last question on the Friday Biz Blitz. Which major South African supermarket chain reported a loss of 5 billion rand for the last financial year, mainly because of what happened in Poland and Switzerland?
Spar.
It's the last question tonight on the Friday Biz Blitz, Joseph.
Spar.
It is indeed Spar. Congratulations. Joseph, congratulations. Joseph from Randburg, the winner of the Friday Biz Blitz this week at 7 o'clock.